Good morning, Steve Freed in Chicago with the morning grain comments. Well, we've got beans up 8 cents, corn 2, and wheat anywhere from 1 to 6 higher. Stocks are lower, the dollar's a little bit lower, crude's a little bit lower, while gold, silver, coffee, cocoa, and sugar are all higher. Seems like a little bit of a turnaround in the grains. Yesterday, we were sharply lower after USDA raised crop ratings, especially soybeans, and especially in the state of Illinois, which is one of the #1 corn and producing states in the U.S. We also had weekly export inspections that were below what the market needs to see to get to the USDA numbers. So most of the market, I think, is looking at the September USDA report to add supply and add to the carryout. I think right now we're seeing a little bit of a positive reaction in the beans because the Dalian meal futures continue to make new highs. The NOPA soybean crush was higher than expected, while despite the higher crush, soybean oil stocks were lower than expected. We're also watching Dalian vegetable oil prices higher on talk of maybe increased India palm oil imports. We also noted that overnight Russia drones attacked the Remy Danube Ukraine port, damaging warehouse facilities, causing some fires. It doesn't seem like that has the impact on wheat that initial drone attacks on Ukraine ports had earlier. Some people feel that the only group that's trading the wheat futures market right now is the managed funds, and they are net sellers. It's interesting when we look at corn and wheat, they are in carries, and some people feel that the funds are selling nearby corn and wheat futures and trying to take advantage of the carry by rolling their shorts higher near expiration of the nearby contract. Open interest yesterday in the beans, we saw total open interest up 5,000 contracts in the beans, 1,000 in the meal, 3,000 in the oil, 12,000 in corn, and 9,000 in wheat, which suggests new short positions on yesterday's sell-off. So it's really going to take some kind of concern about disruption of Ukraine exports. This week we've heard that Romania is going to double the amount of Ukraine exports from 2 million tons to 4 million tons a month, and that Russia is going to try to maximize wheat exports at 4 million tons a month due to positive margins. We continue to see China trying to stimulate their economy, but the results as far as the data is concerned does not show much of a rebound, which adds to concern about commodity imports into China. Weather-wise, above normal temps, India, Canada, U.S., parts of Eastern Europe, Russia, Ukraine, Argentina, all anomalies that are not normal, but not expected to affect crops that much. Next week will be hot and dry across the Midwest, but I don't think the market feels that we're going to lose much production because of that. Also next week is the pro-farmer crop tour here in the U.S. Midwest.